All right, let's talk about Castellum, this pearl of a property company in the large cap sector in Sweden. It's quite interesting when we look at the balance sheet. We find some numbers that are very defensive, very interesting indeed. We will also look at income statement and we will look at the free cash flow statement to really understand the income statement in this case, because there is some accounting tricks going on. But first, quickly macro about the property sector in Sweden. We tend to roughly see a property crash every 40 years. So in the 80s we had one. You can read all about it in, for example, Hans Wallenstam's book about coming out of the property crisis years, how he handled that for Wallenstam, another Swedish property company. And in this case, wow, 2020, we see property crisis again here, just roughly 4 years later than it would have been on the average. But the average still holds true. So, all right, 2060, next property crisis in Sweden, I guess. Let's wait and see. Hopefully I will be around then to see what's going on. Anyways, moving into Castellum here, we can just quickly watch the share price and we can see that it dipped significantly from above 200 Swedish kronor to some lows here slightly above 100 Swedish kronor. Currently they're sitting at a market cap of 65 billion Swedish kronor, so indeed it's a large company, so very much deserving to be a part in the indexes in this case. Although we see here no dividend yield as well and no price to earnings ratio. Why no price to earnings? Well, let's take a quick look here at the income statement to really understand what's going on. We're seeing revenue here growing every year. This is in thousands of Swedish kronor. So we're seeing good increases in revenue. These are very good. The number here to the furthest on the left from 2021, this is 6 billion, and then we have almost 9 billion and now almost 10 billion for the latest years. These are not peanuts. However, what we're seeing is no price to earnings. There's this huge loss in terms of EPS. You can see here every share losing 25 Swedish kronor all of a sudden here in 2023. Why is this? Is the company bleeding cash? Is it in danger? Do we need to make a thumbnail with flames in it? Hold your horses on this one. Let's take a look at the cash flow statement, because there's some accounting tricks going on here. This is just simply Castellum dodging taxes by writing down the values of their properties. If we look at free cash flow, we see that it's actually positive. So they're making money from operations, and when we add back these write-downs, these write-offs, that's not actually cash flowing out of the account to some contractor or some electricity bill having to be paid. It's just an accounting trick to not pay taxes. And I think that shareholders will benefit from this later on when we see some greater numbers again, because you can't do this indefinitely. You have to do these tricks from time to time, and there's something called periodiseringsfond as well in Swedish that you can use to do some tax tricks in this case. However, let's move on from the income statement, because yes, the numbers are looking good in this case. They are looking poised for average market returns right now, although I think that we can see a good returns in terms of real numbers due to this drop down that we've seen in the broader market and due to the potential for great recovery, especially if they cut interest rates, as I believe they will do in the future. But take a look at this, guys. Take a look at the balance sheet on this company. This is very defensive. So total assets here, once again, this is in thousands of kronor, so this means that the number to the left here is billions, so almost 160 billions in total assets. Makes sense, yeah, it's a property company, they have big properties on the balance sheet. And then we also see here the total debt, 63 billion Swedish kronor in total debt. They've been paying down debt, they've been very aggressive even in paying down the debt here from the end of year 2022 to end of year 2023. This is a huge reduction. And we see total assets being reduced as well. So that means write-downs, potentially sold a few properties as well. That's the story that the numbers are telling. But the really interesting part here is take a look at the relation between debt to equity on this balance sheet. They are extremely defensive. Usually on property companies we see a ratio of debt being about 2/3 and equity being 1/3 of the value on the balance sheet. And if we do a quick divide here, we can see that alright, it's quite defensive. We see 120, then 180. So it's just about around there. Just slightly more aggressive. But we've been seeing these numbers been blown out of proportion for other property companies that have done an analysis on this stock channel. So once again, everything is relative. When I look at this normal ratio, this very normal debt to equity ratio for a property company, and I compare it to, for example, ILTP and that crazy ratio that we just looked at a few videos ago, well, then this just sticks out as a very defensive company. And that's what we're seeing from large cap companies. On a final note on this company, we've now looked at the income statement, we looked at the cash flow, we looked at the balance sheet. Let's just comment quickly here on the yield. We don't see any yield from this company. And if I were an older investor looking to preserve capital to be able to live out the golden years, the young years of the senior time, well, if I see a drop-off here from 200 to 100, 50% drop in capital, then that's kind of bad. I don't want to sell shares at that current market price. If the company were to pay out dividends like we're seeing REITs do, for example, well, then that's all fine and dandy. Then you can just live on the dividend if you have a sizable position. You smoke a few less cigars, you downgrade your stake for a little bit and you wait. And when the stock price recovers, you can start selling again and live more like a king again and just wait out these bad times. But here, no dividend. You don't get that passive income coming in from that. And that's something I would look at in a defensive position like Castellum here. I would very much like to see a dividend from this company. But those are just my opinions, my thoughts on this company. As always, guys, hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.